So, very good morning, my dear students.
Good morning.
Good morning, sir.
Welcome you all.
Good morning, sir.
As you are aware now, this is my fourth session. So, I will now tell you how to prepare for the next 1 week, that is up till next Friday. You should have covered by this time my 21 classes. So, today we'll start from 22nd to 28th class. First half an hour, 40 minutes, I will sit on how to prepare for this 7 days classes, what are the focus areas, how you should focus, concentrate on those areas. And thereafter, I will take up any queries from the students in the previous 21 classes, whatever you had. I'll be glad to answer those things. Now, in the 22nd class, you are going to start from the topic relating to managing director, full-time director, manager. Who is a managing director? At the fag end of 21st class itself, you should have discussed. So almost half an hour I discussed who is a managing director of the company. It is not that simple definition. It is pregnant with meaning. I told you, each and every point you will have to focus on that. Fine. Now, having discussed who is a managing director, we will discuss who is a full-time director of the company. And very unfortunately, they have not defined technically as to who is a full-time director. Just like managing director, they have not discussed in very clear terms who is a full-time director. They should have done that. But somewhere, as a passing reference in the definition, he simply said, full-time director includes a director in full-time employment of the company. That doesn't give you much detailed implication of the definition. So that means he should be a director and he should be in full-time employment. But then one case law suggested one point here, even though he should be a director, he should be in full-time employment. So obviously he cannot become a full-time director in two companies because the name itself suggests that he is a full-time director. He should also be given substantial powers of management. So the difference between MD's substantial powers and full-time substantial powers is full-time director can be given sectoral powers. For example, you can say full-time director technical, full-time director marketing. You can say director marketing. So marketing related substantial powers of management has to be given. So that is how you will have to define as to who is a full-time director. Then we spent a lot of time trying to explain who is a manager. I repeat, manager as defined in the Companies Act. He is not a purchase manager, sales manager, or general manager. I repeat 1,000 times, the word manager we would have used in the Companies Act quite a number of times. So that manager. So in the definition of manager, you will find there are a lot of differences. That's okay. He may be a director, may not be a director compared to MD. But manager is the person who is given the whole of management or substantially the whole of management. So manager is much, much more powerful than managing director. Very surprising. Many of us do not know. So managing director is given substantial powers of management, whereas manager is given the whole of management. So that I've explained very clearly. That is the reason in a company there cannot be two managers, because when the whole of management is given to one person, what is the role of another person? And that is also the reason a company simultaneously cannot have MD and full-time director. So this is the position of manager. Now, having defined who is a managing director, who is a full-time director, and who is a manager, now the focus will be on the sections. Why we have grouped all the three positions together is that most of the sections the Companies Act simultaneously applies to all the three people. Having seen the subtle differences between MD, full-time director, manager, we now go into the provisions applicable to all these three people. Then I started discussing, you should appoint these people only for a period of 5 years. it should be a counter check on their performance and efficiency. It will apply now even to private companies also. Most of the positions have been brought to private company. Then, if you want to reappoint him, the reappointment should not be done prior to 1 year. Okay. So then, before we actually go into certain other issues, next is section 196, we talked of additional disqualifications for MD or time director manager. I've been using the word additional disqualification for the simple reason, if you want to first become a director, you should go through the section 164, which defines who is a director. Having crossed section 164, now there are, when you become a managing director or time director, there are 3-4 additional disqualifications. One additional disqualification is your age should be between 21 to 70 years, because some level of maturity we are expecting. But in case you are more than 70, then instead of, you have to get a special resolution passed. And one amendment they have made, if you are not able to get the special resolution passed, central government approval with ordinary resolution should be sufficient. Because what the central government thought, the shareholders may not understand the capability of the managing director. So they said, okay, let the majority approve. I will look into his past performance and give the approval. Then the managing director or time director or manager should not at any time being adjudged as insolvent. These are minute differences I've explained. As a director, after you are discharged from insolvency, you can become a director. But as a managing director, lifetime disqualification. That means he doesn't have a managerial acumen. So there is no point in continuing as a managing director, because he is the person where the entire powers of management is concentrated on this one person. Then we are talking of another 1 or 2 very interesting disqualification, compounding with the creditor. If the managing director or time director manager has an habit of always defaulting payment to the creditors, he should not become, and he is also disqualified during his time also. So we don't want the people who have no regard for law to become MD or time director and manager. Then convicted for 6 months. The words like offense involving moral turpitude, all that has been removed. That's all. 6 months you are convicted, you cannot become managing director, whole-time director, manager. Though as an ordinary director, we saw earlier, after 5 years, you can continue as a director. All those additional disqualification has been very clearly specified. Now, why this section focuses more on these 3 people, MD, whole-time director, manager? In the last class itself, I told you, thousands of crores of rupees of public money is focused on this one person called managing director, whole-time director, manager. Practically, okay, board of directors are there, shareholders are there, they're all fine. But the real power center stems from this nucleus, from this person called managing director, whole-time director, manager. Hence, we have so many provisions concentrated on that. Then the next 2 sections talks of what is the methodology to appoint this managerial personnel. Normally, MD, whole-time director, manager, all 3 together, we'll call them as managerial personnel. He says, lot of procedural points you have to follow. I've given all those details in a table form also. He says, first you call for a board meeting. The matter has to be discussed at the board. It cannot be done at audit committee or management committee or some other committee. Board, not even resolution by circulation. Call for a board meeting. Let the director sit across the table and discuss the pros and cons and get it approved. Then small issues he addresses in the act itself. He says that board meeting should discuss the complete terms and conditions of appointment. Nothing can be delegated. Then the board meeting has to decide the remuneration payable, and also in the board meeting, if any of the director is interested, probably is a relative of MD and all that has to be disclosed. So let the directors involved in informed decision making and take a decision. Then after that, you have to also comply with other small conditions of section 197. When all this is over, the matter will go to general meeting. In general meeting also, the law says very clearly, let the shareholders not blindly approve. There also, the explanatory statement has to give a lot of details about the MD. Once that approval is over, now he divides the appointment into two categories. One, you comply with the provisions of Schedule 5, no central government approval. If you don't comply with Schedule 5, then you have to take central government approval. Now come to route number 1. When Schedule 5 appointment is made, you have to file this MR1 with ROC within 90 days, within MR2 with ROC within 90 days of appointment. So, whereas you go through the central government route, within 60 days, I'm extremely sorry. Schedule 5, if you comply, MR1 has to be filed with ROC within 60 days. If you don't comply with Schedule 1, then central government approval, form number MR2 has to be filed within 90 days. All those small issues we have discussed, and it gives only a small thing in the exam. Now, one very interesting point he says, for some reason, if the central government does not accord the approval, then you have to vacate this office. That means the appointment does not start as a void appointment. There's no prior approval and all. Then what about the acts, whatever you have done? Though you have vacated the office, that is all valid and all. I spent a lot of time on that. Whereas, if you are wrongly appointed without complying with Schedule 5, your appointment itself will start as a void appointment. There are some distinctive points. Then I connected one of the points that you won't automatically get the status of full-time, non-full-time director, non-rotational director for a MD full-time director. He has to get the status during the appointment. So MD can be a rotational, non-rotational director. So it's a connecting point which I have given. Then what about the removal of MD? A lot of provisions have been told for the appointment. There's no provision in the Companies Act for removal of MD. Very logically also correct. Because MD want to remove, don't go under 169. Because 169 talks of removal as a director. If you want to remove him as MD and he wants to continue as an ordinary director, then the board itself has got powers. Because he always reports subject to supervision, control of the board of directors. So this was. And very interesting point was, can we go for a retrospective appointment for the managing director? There are case laws on the subject, hence I have focused. The final conclusion is retrospective appointment is prohibited. So it goes against the very purpose of the provisions of the Act. Why retrospective appointment? You can appoint him only prospectively, not from the old day. So in a scenario where you have just appointed him and he has already vacated the office, but still he continues, that will be a disastrous situation. His acts done also will not bind the company. MD will be personally responsible. You have to return back all the remuneration which you have received, lakhs of rupees. So the consequence will be disastrous. All that I have discussed. Having separately discussed in class number 22 about this MD full-time director manager and the various provisions regarding his appointment, in class number 23, I have gone to managerial remuneration payable to these managerial personnel. There is a lot of restrictions, control mechanism. You just cannot pay lakhs or crores of rupees to managerial personnel. Who are these managerial personnel? We are talk of MD, full-time director, all other ordinary directors plus manager. Manager may be a director, may not be a director. So when we use the word managerial personnel, we don't refer to company secretary and other people. They may come under the definition of KMP, key managerial person. But remuneration control is only for MD, full-time director, manager, and ordinary directors. One point we will all remember, in the recent amendment, they have relaxed the provisions relating to payment of remuneration. But control mechanism, they have not removed. Their school of thought said, sir, it is a public company. Let the shareholders take care. Why should the government come with the control mechanism? No. In a country where even today, the huge distance between haves and have-nots, the government thought still to put lot of restrictions on the remuneration of managing director. Just to cite an example, if let us take the extreme case of Reliance Industries Limited. Reliance Industries Limited net profit is say 10,000 crores. I'm not sure of the figure, it's only for understanding purpose. Reliance Industries Limited net profit is 10,000 crores. Under the control mechanism itself, the law says MD can take 5% of the net profits. Mind-boggling. 5% of net profits means what? 500 crores. No mistake in my figure. And per month, roughly, he can withdraw how much? 40 crores, not quote, crores. Monthly remuneration within the parameters of law. He may not withdraw so much money, but if he wants, he can do that. See, the idea is you earn more profits, you can take whatever you want. Okay, you take as an interest, you take as a dividend, it makes sense. As a remuneration, you can withdraw 40 crores. See, just for comparison, I'm telling you, if you are an IAS, IPS officer in the government, you tremendous responsibility, tremendous pressure on you. Say you are a Chief Justice of India, or you are the army chief, or you are something like a judge, or you are something like Prime Minister, or you are a Chief Secretary, or any other top position in the government. I don't think they pay with all the perquisites together more than 2 to 3 lakhs per month maximum salary. In that context, you see, what can be more pressure on the managing director? Okay, some 5 lakhs, 10 lakhs could make sense. No. How much you can withdraw? 40 crores. So the gap. So my point is, still the government is afraid to remove all the restrictions payable to the managerial person. And you as a chartered accountant will be sitting there in the cash box. So a lot of questions are given in the examination. You have to monitor all these payments. Now, first, I divided the whole chapter into 3 parts. First, I've explained the remuneration. Having explained remuneration, I set some common points, the limits of remuneration which are applicable to all the directors, managing director as well as full-time director. I said overall should not exceed 11% of the net profits and all. If it is more than that, ordinary resolution in general meeting has to be passed. Then sitting fees does not come under remuneration, and all those general points which we discussed. Having discussed that, we went to the next list. What are the specific provisions regarding remuneration payable to managing director, full-time director, manager? With lot of examples, we sat on that and we had discussed the inner limit of 5% payable to them. Then combination, more than one MD, full-time director, manager, what combination? It can go up to 10%. But a company cannot simultaneously have MD and manager. So those interactions and all are spent on that. Now, after the amendment, for any reason, if ordinary MD or full-time director wants more than their inner limit of 5%, they said previously, you get it approved. But now what they say, apart from the special resolution, you should not have defaulted for the payment to financial institutions, banks, non-convertible debentures and all. If there is a default to these secured creditors, their permission also is required. Now just imagine, these are all the provisions. So how can the MD enjoy at the cost of default to the creditors? Nice provisions have been made. So how much is the restrictions for managing director if you earn profits and all? Then the third part of the story in manager remuneration is, if you earn profits, excellent. But profit earning is not in their hands. It depends on various factors. So the law says, if you are not able to earn profits, since you have spent a lot of time and effort, I will pay you what is known as minimum remuneration as provided in Schedule 5 based on your effective capital. So those tables we have discussed, and students must know, very important, that all those tables given in Schedule 5 must be by hearted. the limits on salaries. Because in the examinations, particularly multiple choice also, he can give you the effective capital and he will ask you quite a lot of details. You have to be prepared for that. Then I spent some time regarding payment of sitting fees to ordinary directors. Now there are quite a lot of changes have come in that, because 1 lakh you can pay sitting fees to a director. Then small issues like can you pay differential sitting fees? Surprising, it's allowed now. You can pay to ordinary director 1 sitting fee, independent director, women director, higher sitting fees. The differential sitting fees subject to restrictions are also allowed. And you want to pay sitting fees more than 1 lakh, then not procedure, you have to follow all that. Now, there was very, very minute points, and my worry is he addresses only that in the examination. For example, a lot of controversy and discussion that if a person comes to attend the meeting and the meeting is not held because there is no quorum and it is adjourned, will he get the sitting fees? Different books have given different opinion, but very authentic opinion in the absence of department clarification is yes, he can get sitting fees because it's not his mistake. He came all the way, he has spent time, and therefore, even if the meeting is not held, because the word emphasizes on attending the meeting, sitting fees is paid for attending the meeting, not for the holding of the meeting. So, even if he comes for the adjourned meeting, again you have to pay sitting fees. Those things are clarified. And the previous questions on sitting fees also, we have discussed at length. Then I spent some time trying to discuss the traveling expenses reimbursements. How beautifully they have drafted. What they are saying, while we control the sitting fees, what about the traveling expenses payable to ordinary directors who come from various places? Will they get flight charges or only train charges? Will they get a 5-star hotel accommodation? The law beautifully says everything depends on the articles. I don't want to interfere in small issues based on your financial capacity and your mindset. You decide in your articles. So chartered accountants, when they do the audit, they have the wrong impression, at least the students level, when you do articles. Some of them are in the wrong impression. Oh, sitting fees, the expense reimbursements can be given just like that. No, you have to check up the articles. The articles will tell you what kind of eligible reimbursements you will get. So all those points I've discussed. While the right to receive sitting fees is an inherent right, the right to receive traveling expense is derived from the articles. Then for the other directors, they have contributed for the managerial excellence, how much you can pay that 1%, 3% commission on profits. And of course, for ordinary directors, even if it's a loss-making company, no further payment can be given. Lot of questions are concentrated. So in a very comprehensive manner, you have to understand the provisions regarding remuneration rather than focusing on individual sections. Then there are a lot of individual provisions. Suppose you have drawn in excess, anticipating special resolution or whatever it is, the law now says it's not punishable. You have to refund it, but no waiver. But then they have amended. If you want a waiver, then the shareholders have to decide by special resolution. But if you are defaulted to the secured creditors, their permission is also required. Then what about the payment of guarantee commission? There is Susan Textiles case law, which I have discussed. Guarantee commissions will not be treated as remuneration because they are paid for the risk which the director take. Then there was earlier a lot of restriction. If you are a director both in holding and subsidiary company, since you are getting the money in the holding company, you are prohibited from the subsidiary. All that restrictions, they have removed it. Then if you are rendering some professional services and you have that professional qualification, then you can you can take any amount of remuneration. Those restrictions will not apply, provided you make professional services. I explained all that quite a lot of time. Then now they are saying insurance premium paid by the employer, because insurance premium for what? For all the liabilities which directors may incur. That insurance premium will not be included in remuneration, provided you are not convicted. If you are convicted, then the premium becomes remuneration. Then one amendment has taken place, which I have told auditors have to report in their audit report, they have to make a statement whether the remuneration payable is as per the act and the rules. That is the focus now. So this is one area, particularly in the Caro report also he has mentioned, that have you seen, particularly in a public company, the remuneration payable to managing director is as per the rules. So you have to report on that. Then the board report contains certain details. Then the penalties are terrible as usual. It is 1 lakh rupees, the defaulting person, which can go up to 5 lakhs. This is the penalty. Then the type of questions they have given, I've discussed in this chapter number 23, class number 23. Then in class number 24, I started with schedule 5. I repeat, schedule 5 is one particular section, one particular schedule, which you are to read as if it is a section. Minute points will also be asked on schedule 5. Now, schedule 5, why you have to refer? Schedule 5 has to refer for two reasons. What are the conditions of appointment without central government approval? And also, what is the minimum remuneration you will get in the event of loss or profits? So, the first part deals with the conditions of appointment, all that I have discussed. For any reason you are not going to comply with those conditions of appointment, then central government approval will be required. Now, these conditions of appointment has to be certified in that MR1 to be filed by MR1 within 60 days. That should be certified by the statutory auditor or company secretary. In the absence of company secretary in practice, we spent a lot of time on those areas. So part 1 dealing with conditions of appointment. Then part 2 talks of remuneration. If you are a profit-making company, no problem. That 5%, 10% you go. If it is a loss-making company, we have spent a lot of time on section 2, part 2. What is the minimum remuneration which you can pay? Maximum remuneration. You can pay less than that, not more than that. Now they have relaxed a lot. That limits and all I have given, you have to remember. If you want more than that, then special resolution has to be passed. Central government approvals has been totally dispensed with. So when you read my classes, you read at a stretch for that 1 hour 45 minutes. Don't get up in between. Then only that sequencing will come. So calmly read, slowly read, make points and that. And second time, since I have given you 2 times, you can see once again. So you read and try to understand the first time in a very elaborate manner. Because he gives minute issues. What is effective capital? What are the components of the effective capital? Because he gives the balance sheet in the examination. You have to calculate the effective capital. Based on the effective capital, what remuneration you will get? What are the conditions to be fulfilled? Quite a lot of questions they are given. Then, apart from the limits, there are further remuneration also you can withdraw. So finally, I said, you have to comprehensively read and understand. For example, how much remuneration is to be paid? Sir, it is a public company. Private company means there's no restriction. Then you are appointed as MD, whole-time director, manager. Ordinary directors, only sitting fees, they won't get. Third, you are schedule 5 appointment. If you have taken central government approval, then you won't come here. You comply to the schedule 5, then it is a loss-making company. See the parameter. If it is a profit-making company, you can withdraw 5%. Loss-making company, then based on the effective capital, you can withdraw. For example, in the table, if the effective capital is less than 5 crores, you can withdraw yearly remuneration up to 60 lakhs minimum. So 5 lakhs any MD will get under the Companies Act. That is why most of the appointments are under Schedule 5. You want more than that 5 lakhs, any limits, special resolution has to be passed. Let the shareholders decide. After all, it is their company. Why is the managing director asking for more remuneration? But other part of the story is very simple. The more you pay, the concept of free lunch has gone. The more you pay, the more efficient personnel you will get. That is the logic. I used to say, if you throw peanuts, you'll get monkeys, as simple as that. So remuneration is the deciding factor. There are competent people. One man can change the whole show. I've seen hundreds of companies where managing director, because of their decisions and policies, have turned around the corner. Hence these restrictive provisions. So this is what I've spent a lot of time on this class 24 discussing schedule 5, all the limits up to which. Then in class 25, I've continued with schedule 5, part 3, the shareholders approval required, when ordinary special resolutions are required. Then I've taken almost 25 plus previous year question papers, which have solved each and every point. When you read the previous year paper, you will be finding that how comprehensively he gives the question. Unless you have spent 5-6 hours reading the whole section in a comprehensive manner, you will not be able to answer. So I told you in the very first class, these are all knowledge-based questions which they give in the examination. This is how I spent a lot of time on this chapter number 25. Then, when you make an application to central government, what are the parameters they will consider? That is also open guidelines. So better you give the justification in a loss-making company, why you are not complying with Schedule 5, why you want more remuneration, not remuneration, why you are not complying with Schedule 5, then which condition you are violated, central government may give you approval if you are a fit and proper person. Then the next area of discussion had been, what is the compensation payable to MD, whole-time director, manager for loss of office? Look at the contradiction here. At one end, you have been appointed for 5 years, fair enough. But any time during the 5 years, shareholders can throw you out. Board of directors can throw you out. So your position is very flimsy. So no love lost, perform or perish. So he is a whole-time director, managing director, manager. You simply throw him out. You have to pay compensation for loss of office. Ordinary directors will not get compensation, only MD, whole-time director, manager. Then there are restrictions. How to calculate that compensation for loss of office? Then under what circumstances he will not be paid compensation for loss of office? So a lot of questions come there. Now what they have done, under the rules also they have added quite a lot of cases where you should not pay compensation for loss of office. For example, you are defaulted interest on the payment of creditors and the default is still continuing. You are not paid to debenture holders. Then taxes you are not paid to the government. The default is continuing. Statutory employees defaults. Preference shares you are not redeemed. Stop the compensation to the MD for loss of office. See the interconnected sections which they have introduced. That's it. It is no longer memory-based questions. It is knowledge-based questions. You don't have to by heart. If you focus on the subject, you always think you are sitting in the seat of managing director. As simple as that. This is the advice I give to students. Just imagine 2,000 to 5,000 crores of public money is in your hands. How do you run the business? 75% apart from the business decisions, you have to also think protecting the interest of shareholders and others, corporate social responsibility, and how to utilize the money properly. So the chartered accountant is the right hand. You have to advise the managing director on periodical basis. Sir, this you can do, this you cannot do. The punishments are terrible. This is what I've been telling the students time and again. Chartered accountant is like a secretary to the government of India. Minister is there, fine. But minister's decisions will be controlled by secretary within the parameters. Like that, you are the right hand of MD because you are key managerial person. Something going wrong, you are also going to face the music. Fine. Then thereafter, even when the shareholders pass a resolution to pay compensation for loss of office, the resolution should give all the details. And this he asked the examination. And the law doesn't stop with that. You have to give all the details. No, the law says, who is the director? What is the amount you want to pay? Why the compensation has become payable? What is the data board meeting recommending the payment? What is the basis of amount which you have determined? What is the reason or justification for the payment? How you are going to pay? By cash or any consideration other than cash? What is the source of payment? See here. Just imagine, he gives a question like this. If you by heart, it won't sink in your mind. How does it sink in your mind? You are the managing director, you are the person. You want to pay compensation. Start thinking. Logically, start thinking. If you say, when the money goes out of your pocket, how difficult you feel. What are the things logically you'll ask? Just think about it, you'll get all the points. This is how you have to focus, you have to concentrate. Then quite a lot of questions are given on compensation, which I have addressed. Then recovery of remuneration. Now this one section, later on it is discovered that a fraud has happened in the affairs of the company and you have also indulged in any fraudulent acts and all, the compensation will be recovered from you. Then the next chapter, which I have discussed in the 25th class itself, is appointment of KMP, key managerial personnel. That's amended section. Now one level below the board also you can include in KMP. Then when compulsorily they have to appoint 10 crores or more. Then previously company secretary 5 crores, they have changed it. Now company secretary also has to be appointed when the paid up capital is 10 crores or more. They have increased the limits. These are the small areas they will ask. Now, see, I was surprised. They spent about 4 marks asking one question. The question was, a person has 2 qualifications. He's a qualified chartered accountant. He's also a qualified company secretary. He has got both FCA and FCS. Can you appoint that person as a finance controller come company secretary? Because he has got both the qualifications. The old Companies Act, it was permitted. Now, no. In the new Companies Act, no. Where it is written, if you see the wordings very carefully, key managerial here, every listed company and other public company having paid up capital of 10 crores or more shall have the following whole-time personnel: managing director or CEO or manager, comma, and in their absence, a whole-time director, semicolon, company secretary, semicolon, and CFO. That means even if you have both the qualifications, you cannot appoint the same person. Many of them do not know. This is a debate which went at the institute, and still we are yet to get a clarification from the government. So in the absence of ministry's clarification, you have to take a stand. These two people are two separate people. If you give a logical answer, you're not going to get marks. Now you don't have a bare act with you at that time. See how deep he gives the question. This is what I've been emphasizing the student. Read number of times, read slowly, try to understand. The government of India expects you that thousands of provisions should be in your mind. You are a computer by yourself. Any time you open it, it should be reflected. So you have to develop interest in the subject. Go through my book very carefully. Some of the previous questions which I have given and focused on that is just to tell you what kind of questions also they give in the examination. Jumper questions come, 2 marks, 3 marks, 4 marks, do and die situations. Then after that, we discussed on restrictions appointment of chairperson, new sections, new provisions. Normally, MD or any director can become chairman. But then he says certain big companies where turnover is 100 crores or more, or turnover 1,000 crores, paid up capital 100 crores. We don't want MD and chairman to be the same person. If you want the same person, let have other conditions. And a lot of changes have taken place now in the new Companies Act. Previously, group companies. As I told you, I was in Rasi Group. As a group secretary, main secretary, I was Rasi Cements Limited. I was the company secretary. There were a lot of small private companies, public companies in that group, say about 18 private and public companies. I was a group secretary for all. They were not subsidiaries. But no, now, nothing is possible now. He says, company secretary, CFO, full-time director must attach only to one company. Of course, subsidiaries, you can continue. These are all full-time people. So you can't hold a similar office in any other public or private company. Only for managing director or manager, they said you can hold office, similar office in two companies. Because managing director is never a full-time employee. So they have restricted all that. Gone are the days where, of course, you can become a director in other companies. Now, many of you do not know no restriction. I am a managing director in one company. The other section permits me to become a director in 10 public companies and 20 private companies. Those 10 and 20 also, the company in which I am a MD must give you permission. See the linkages which he has provided. So all that I have covered in class number 25. Then continuing discussion on 26, then they said the previous year questions. Small issues they have addressed, all that I have addressed. And then the topic starts on company secretary. What is the role, function and duties of company secretary? In the old Companies Act, there was no such role. There was no legal provisions dealing with company secretary. I still remember when I went to a client and asked for the annual returnership of company secretary. Across the table, he asked me, Mr. Jayaraman, what will you do as a company secretary, as a practicing company secretary? First time I realized it became very difficult for me to answer. The first I said, no, sir, board meetings, general meetings, when they hold, I conduct it. No, it's a private company, the board meetings are only a formality. Next, sir, whenever allotment of shares are done, we have to file all the returns and all. And that our chartered accountant will do. Next, sir, when there are changes in directors and all that, so we have to file the necessary returns and all. No, it's a family concern. We 4 people are directors. Hardly there'll be any change. Next. What next? I finished my cup of coffee and went. So fortunately now, they have given in very clear terms, since you are a key managerial person, what are your duties as a company secretary? Very clear. Each and every duty, we can spend hours together. He says, report to the board for the compliance of the provisions of the Act, rules, and other laws applicable to the company. My God, just imagine. Any manufacturing company, including labor acts, taxation acts, and all that, if you take 2,400 acts will apply to them. Labor acts itself, almost 320 labor acts are there. Bonus Act, PF Act, ESI Act, Minimum Wages Act, Payment of Wages Act, then Factories Act, the list goes on. And you give a certificate to the board, yes, the company has complied with all these provisions. How much responsibility you have? And he says, provisions of the Companies Act, rules, fine. And other laws applicable to the company, you have to give a certificate. How much responsibility is just thrust on the company secretary? Just imagine. Then ensure that the company complies with the secretarial standards. Mandatory secretarial standards, you are responsible. Give a certificate to the board. Then provide the directors collectively, individually, the guidance. Why I'm emphasizing is, see the language. Your MD cannot say, don't talk to the director unless I give the permission. Any director can call me. He can call to his house. He can ask me to explain the provisions. I'm not answerable only to managing director, though I'm an employee. Board, I am collectively responsible to the board. As a KMP, I am responsible to the shareholders. I am responsible to law enforcing agencies. Then he says, convening the meetings, facilitating the convening the meeting, all those things. So I am responsible to convene the board meeting, general meetings and all. And I am responsible to get the approvals. Various provisions of Companies Act, board approval, meeting of the board approval, then general meeting approval, the tribunal approval, central government approval, ROC approval, RD approval, all approvals I am responsible. Then I can represent before the various tribunals, quasi-judicial bodies, Competition Commission of India. I've got authority to represent. Then assist the board on good corporate governance. Beautifully, I love to discuss duties and functions of company secretary. And I've been telling you, most of the time, the paper setters for corporate law, maybe a chartered accountant, may not be a chartered accountant, but usually he's a company secretary. So tilt towards secretarial practice, obviously will be much more. Then secretarial audit, which companies have to go for secretarial audit, I've explained. Then came the inspection, inquiry, and investigation. I continued in that class. Point is the inspection, inquiry, investigation, dry topics, but dry or wet, you have no choice. Maryadaya padikanam. You have to read because questions are focused and concentrated on that. One good thing is there will not be too much of case laws or department clarifications or comparison. Straight questions only you will get. So I have explained the various routes from which the inspection will stem out. So inspection, what is the difference between inspection and investigation? Inspection is done as a matter of routine. When ROC does inspection, when the central government, SEBI is also given powers to inspect. All that I've explained, the routes of inspection. And when the inspection takes place, what are the duties of the company during such inspection? This gives the examination. They may not be in a very funny way explained. Small issues. Produce all the books and papers in your custody or control. Let us be practical. When the inspector comes, you will say, sir, current year books of accounts are with the statutory auditor. Last year books are with the internal auditor. Prior to that, it is with my MD's mother-in-law who is doing special audit. Some nonsense we try to report. No, he can arrest you, take you into custody. Produce. I'm not going to check here and there. Get all that. Furnish them with the statement, information, explanation. When the inspection goes on, you cannot attend to your routine duties. Sit down. Just like audit. Please give me the breakup of the advertisement expenditure. Sir, you can remove. No. So furnish me with all the statement information. Provide them with all assistance in connection with the inspection. Like that small duties. And if you don't perform punishable section, you will vacate your office. See, if a director or officer convicted in the section regarding inspection, under the section, is deemed to have vacated the office and is disqualified from holding any other office of the company for next 5 years. That provision was there. He is removed now. So don't play with the inspectors. If he gives a report that you are not cooperated, life comes to an end. For the next, not 5 years, lifetime, you are not fit to hold such offices. Then what about the inspection report? Search and seizure. All that I've covered in class number 26. Class number 27, I have started with investigations. What are the different routes of investigation? What is 210 investigation? What is 212 investigation? Now they have constituted SFIO, Serious Fraud Investigation Office. When the matters will go to SFIO route, when the matters will go to central government route, and different section, here section numbers are important. Then when I start the inspection into a flagship company, say Nagarjuna Fertilizers Chemicals Limited, I would like to also do inspection into the group companies to know the flow of funds. Can I do that? Yes. What are the provisions? They are covered in section 213, all that I've explained. Then certain common procedures when you do the investigation, you got the powers of a civil court, all those points. Then investigation into related companies, power to seize the books of accounts, section 220, all that. Then what are the follow-up action? Investigation is over. So what they will do? What prosecution? Prosecution will lead to fines and imprisonment. But then please listen, fines and imprisonment will prosecuting the director. How does it serve the purpose for the shareholders? Satyam's computer scam, LIC alone has lost 1,000 crores. So the next one is recovery of damages. So putting them into prison will not serve any useful purpose. So next is wherever I can trace out the assets of all those guys, officers and directors who are misused, I get the attachment. Nothing has happened practically in India, but anyway, there are provisions. You can seize all those assets. And then in certain cases, where you can go for winding up of the company on just and equitable grounds. Once the government comes to a conclusion, it's a social parasite. They are not doing any genuine business. If you allow this company to continue, it will destroy the very public confidence in business. So there are provisions where we'll order for winding up or go for operational mismanagement provisions. Then there's another type of investigation. One is investigation into the affairs of the company. Second is investigation into the ownership of the shares of the company. When this investigation will be conducted. And when this ownership, because a lot of benami transactions are there. So when ownership investigation is done, then what the tribunal will do, what kind of orders you can get. So they are given questions on that. Then when the investigation goes on, freezing on assets, that from there I've started the 28th class. Then protection of employees. If you cooperate with the investigators, obviously you lose your job. They cannot touch you, they cannot demote you. And protection to employees, 7 times he gave the examination. So this small section. Then voluntary winding up will not stop the investigation. Even if voluntary winding up has started, you have misused the funds, stop the voluntary winding up, you can continue with the investigations. Then one new penalty has been introduced in section 229. If, look at the language, if any of the officers or employees who are required to make a statement or explanation in the course of inspection inquiry, he will be punished if he destroys, mutilates, falsifies, conceals, tampers, unauthorizedly removes, or is a party of destruction, mutilation, falsification of the documents. Will you remember all these words and write? As a paper evaluator, okay, I'm not interested that you write all these words. But ever have you had the patience to understand what are these words? Each word carries some meaning. I'm not saying that if you don't write all these words, you will lose marks. I'm not saying that. But just imagine, destroys, you just carry it through. Mutilates, you to rearrange the whole thing. Mutilate. Look at the falsifies, pass wrong entries, confusing entries, post wrong entries, falsifies. Then conceals, remove some pages, remove some vouchers, conceals, tampers, unauthorizedly removes. Wonderful. What I'm trying to say, you spend more time, you'll enjoy all this. So once this is over, the next 16th chapter in that class itself, I've started with operational mismanagement. In the initial 2-3 chapters only, you take a lot of time. Rest are all small chapters in 2 hours or 4 hours, each chapter will be over. Having finished inspection investigation, in this 28th class, I've started with operational mismanagement. I spent a lot of time defining what is oppression. There are hundreds of case laws. How will you remember? However, the Supreme Court made an attempt to explain what is oppression. And I have devised a method how to remember it is oppression cases, all that I've explained. Then who can go to the tribunal, complain for oppression? Not only that, Then who is a member? There are certain case laws where you are only a shareholder, but still you can make an application, you cannot make an application, how the consent has to be taken. All those case laws I have explained. Then not only the members can go to tribunal for oppression, what is the allegations they have made? Allegations also has to be proved before admission of your application before the tribunal. Then what you have to prove before the tribunal, you will be surprised to find not only you should prove the operational mismanagement, the facts justify winding up, but unwinding up will unfairly prejudice, then the tribunal will pass orders. I've explained all that in detail. You will find it very interesting there. Then what kind of orders the tribunal can pass? Now they have made a very important amendment, say about 6 months back, if not earlier, just about 6 months back. And that is all relevant for your November examination also, that powers of the central government under the section. So central government themselves, what kind of action they can take in the section relating to operational mismanagement, what they will go. They have added all that any person with the conduct of management is guilty of fraud, misdemeanors, negligence. Business is conducted not in accordance with sound business principles, with the scams and all that. It's not necessary the complaint should come only from the members. Suo moto, central government can take inquiries. Then what kind of actions they can take? At the conclusion, tribunal makes a record, and immediately the tribunal pass orders to remove and throw out all these directors. They cannot hold office for 5 years. And this section is notwithstanding anything contained in any of the provisions of the Act, and they can remove irrespective of the contract, this, that, and all. And if you are removed, no compensation for loss of office. This is section 243, 1B they have added. Then lot of questions they gave on operational mismanagement. And I gave some examples, what are oppression, what are cases of oppression, what are not the case of mismanagement. In that, I have concluded class number 28. So I think I've got not much time left over. So I now request any questions. See, every time I have been making this request, students, you have got any doubts and all, I asked you to give me a mail. I don't see any mail coming from the students. Second, I also asked you, I gave my cell number. I said, you send a WhatsApp or a mail. I don't get anything on that. So please read. Or maybe I'll take it in a very positive way. Since I explained very much in detail, there is no questions for you. So I'll be glad to answer some of the questions. Yeah.
Sir, in case of small shareholder director, who can also act as an independent director, is his directorship considered as one or two, sir? For both maximum directors and maximum
No, for
directorships?
all other provisions, he'll be considered only one director. For all provisions of the Companies Act, he'll be considered one director. Only one point he says is that requirement of appointing both the small shareholders director and independent director has been filled up. That's all. His capacity is only one director. He will have only one vote. He will be counted only one person as quorum. That is very clear. I repeat again, he says there are various provisions which says you are, if you comply with the independent director provisions, you are to appoint. So he is acting in both the capacities. That's all. But for the compliance of the provisions of the Act, he'll be treated as one director only. Good.
Yes, sir. Thank you, sir. That's all.
So no questions. Yeah? So anyway, I request all the students to go as per the timetable announced by Shetty sir, and then only it will really be productive, useful. I expect more questions in the email. Please send it to me, or you give it to the CAPS Institute there. She can also ask me quite a lot of questions. You can communicate to me as I told you. Anyway, thank you very much. I enjoyed. Any other questions before I conclude? so not many. Thank you very much. Wish you all the best. God bless you all. Thank you. God
Thank you,
bless.
sir. Thank you.
Thank you,
Thank you,
sir.
sir.
Thank you, sir.
Yes, sir.